Great. So welcome everyone. My name is Jennifer Phillips. I'm here with the Munich Climate Insurance Initiative, which is an NGO hosted by the UN University in Bonn. And I'm here today to be your moderator to talk about the topic of building financial resilience in the Pacific region. I'm joined here by 5 amazing panelists that are coming to represent different regions and areas of the Pacific and different levels of governance. And so to kick us off with a little bit about what this session is going to focus on today, I'm going to pass over to my colleague Krishnan, who will introduce himself and set the stage for today's discussion and session.
Yeah, very good morning, very good afternoon, and very good wishes from the Pacific to participants from the rest of the world and the region. Thank you, Jennifer, for the kind words of introduction. And I take this opportunity to also thank the organizers of this virtual event and welcome all the participants. I'm extremely privileged to provide brief opening remarks and join an eminent panel of speakers for this very topical session on building financial resilience in the Pacific. As I was just getting into the session, I happened to quickly browse through the editions of the PAC news that we get 2 or 3 times in a day. And yesterday's, the session that just ended today at the COP, one sentence that really stuck and that is very relevant to what we are going to talk today, which the Prime Minister of Fiji spoke, is that the global canoe is sinking. We all need to take concerted action now. Those are very profound words and very relevant to what we are going to speak today. The Pacific small island developing states are extremely vulnerable to natural hazards, both those caused by climate change and otherwise. So if you ask anybody in the Pacific who has been there in the last 2 generations, they are not unfamiliar to words like cyclones, earthquakes, tsunamis, landslides, droughts, volcanic eruptions. These are all very familiar to most Pacific Islanders. Only the specific peril may differ from one country to another. Cyclonic storms in particular are increasing in frequency. The time that they come is also changing. And what was earlier considered to be 1 in 10 or 20 year events are now recurring quite frequently, as evidenced by even the last 5 years. So I don't claim to be a Pacific Islander, but I've been in the Pacific for at least 15 years now, and I can see certain things visibly changing. The World Risk Index, which is published by through several sources, ranks several Pacific SIDS among the top 10 or 15 countries. And these are due to the combined effects of their exposure to natural hazards, the lack of coping capacities, the underdeveloped social protection systems, and a host of other development challenges. These small island like developing states are typically characterized by low and dispersed populations, geographical remoteness, limited resource base, not a very well diversified economies. Their infrastructure is poor, and the connectivity is also stretched. So all these contribute to the vulnerability and the lack of coping capacities. And climate change is only exacerbating the situation and adding to the long list of the already pre-existing development challenges in the region. Sadly, the Pacific SIDS bear the brunt of a problem that they did not create, are not responsible, and therefore the Pacific leaders who are in Glasgow and those joining remotely have been articulating their positions. Not only at the COP this year, but for some years now, strongly demanding a higher and a regular flow of climate finance to the region to tackle a problem that they are not responsible for. there is a strong case for appropriate disaster risk financing instruments, especially I would say insurance, to be deployed in the region to address the persistent development challenges. Disaster risk financing as part of an integrated approach to disaster risk management needs to be firmly embedded into national and regional policy making. And I hope that some of the panelists will talk about this in their presentation today. UNCDF that I represent in the region is leading the implementation of the Pacific Insurance and Climate Adaptation Program in partnership with the UN University and the UN Development Program. We have set up this program with a view to addressing some of the challenges that I mentioned above. And the aim is to develop, deploy, pilot, test, and scale appropriate and affordable parametric insurance solutions at the micro and the meso levels, which primarily target the agriculture, fisheries, tourism, and retail sectors with the cross-cutting focus on women, youth, micro, small, and medium enterprises, migrants, and people with disabilities. The program itself was launched late last year on 2nd of December 2020. And despite the pandemic challenges, by working with the private sector insurance companies in Fiji and with a host of other partners, channel partners, distributors, the first of its kind parametric microinsurance for the region was launched on the 25th of August a few months back. The pilot is underway and has been received extremely well. Presently, it covers smallholder farmers, fishers, market vendors, and micro business owners. So just as how vaccines have offered some hope, against the pandemic, there is now some hope that innovative solutions such as this may offer a ray of hope for the Pacific households against the effects of climate change and build their financial preparedness and resilience. I look forward to very lively discussions and perspectives that will contribute to the theme. Thank you once again for this opportunity, and I welcome all the participants. Naka.
Thank you, Krishnan. So basically with today's session, what we're aiming to do is bring in many different perspectives that work on this topic of trying to build financial resilience in the Pacific region. For the reasons that Krishnan has outlined, this can be quite a challenge for many different reasons. However, we have seen great strides being made in the past couple of years, and especially the past couple of months, working towards developing new solutions and new instruments. And so we really look forward to getting to know about these different approaches in today's session. And with that, what I would like to do is to pass to Mosazes Sikavu, who is a regional coordinator for the Pacific Island Forum Secretariat, to tell us a bit about their work in the Pacific region, and especially how they got involved in this topic of building financial resilience.
Thank you very much, Jennifer, and many thanks as well to Krishnan for helping to set the tone very well for our discussion today. Just a bit of introduction and to talk a bit about the work that we do. I am a regional coordinator for a World Bank funded program called the Pacific Resilience Program. And the work that we do spans, apart from working in areas related to financial protection, is we also assist with strengthening national capacities in early warning and preparedness, resilient investments. So it's in relation to that we work closely with what we refer to as PrEP countries in the Pacific, being the Republic of the Marshall Islands, Samoa, and Tonga. There are two regional intergovernmental organizations that are part of the PrEP or support the PrEP, one being the Forum Secretariat and the other being the Pacific Community or SPC. So there's been a long history of the Pacific Islands Forum Secretariat's involvement in this space and really involvement in disaster risk management generally, risk financing or financial protection being perhaps an essential component part of that. And so part of the history stems back to the mid-1990s. At a policy level, the Pacific Islands Forum is, of course, the Pacific region's premier political and economic organization. And the Forum Secretariat provides a convening and coordination role for the work of the Forum to facilitate decisions by Forum leaders. The Forum Secretariat also supports the work or work in relation to dialogue around finance and economic matters and trade, foreign affairs, a whole range of sustainable development issues and challenges the Forum is involved in, but largely at a political level. So on an annual basis, apart from supporting dialogue between leaders, we also support dialogue between our finance and economic ministers, trade ministers, and other senior level types of gatherings is what we exist to support. So with a history of supporting the region in at a policy level, I should emphasize in disaster risk management, really the upswing in the Forum Secretariat's involvement in the disaster risk financing and insurance space was around 2007, when through the efforts of really the World Bank and organizations like the Pacific Community, the former Pacific Islands Applied Geoscience Commission, there was a greater level of involvement in this work. And the Forum Secretariat, and particularly through the Forum Economic Ministers meeting, this is where the discourse started to pick up momentum. And the Secretariat has been involved in helping to facilitate those discussions since then. I perhaps am speaking too much and taking away from what you want me to talk about later on, so I'll just stop there and really just to say thank you to yourselves, PCAP, UNCDF, and other organizations that have been responsible for bringing us together this afternoon. Thank you.
Thank you so much, Mo. And yeah, we'll dive a bit deeper into some of the topics that you had mentioned on later on in the call. The way the session will be structured is that we'll have a brief introduction from each of the different panelists, and then what we'll do is have a conversation with them to go a bit more into detail about where we were, where we are, and where we want to be going over the next couple of years when talking about this topic. And so with that, what I would like to do is introduce our next panelist, Aholutu Palu, who's the Chief Executive Officer for the Pacific Catastrophe Risk Insurance Company. And he'll be giving us a brief introduction to their work and what they are planning to do over the next couple of years.
Thank you, Jennifer. And good afternoon, good evening, good morning, depending on wherever you're connecting from. Let me begin by thanking the organizer for the opportunity extended to the Pacific Catastrophe Risk Insurance Company, or BigQuery for short, to be part of this great event that brings together financiers, development partners, industry representatives, government and regional organization officials to exchange expertise and ideas about building financial resilience in the Pacific. I think we all know, Jennifer and participants, that resilience is a hot conversation topic these days, and it has become a dominant framing for policies and programs aimed at reducing vulnerability to extreme weather and natural hazards, promoting climate change adaptations, and strengthening countries' ability to manage its own risk. And this is the current effort BigQuery is undertaking by offering Pacific Island countries innovative financial and technical solutions to manage risk by building financial resilience innovative solutions. But before going into the details of what we offer to the market or to the Pacific Island countries, please allow me to briefly share some foundational information to help participants provide some sort of a context of the existence of the company. As natural hazards and disasters are becoming more frequent and so severe, exacerbated by climate change, the Pacific Finance Ministers in 2007 requested the World Bank to assist the Pacifics developing a program or mechanism that can provide immediate disaster response finance to strengthen countries' preparedness capabilities in order to make them more resilient in fear of such disaster may erase years of development gains. Well, the World Bank responded positively and launched a Pacific Catastrophe Risk Assessment and Financing Initiative project in 2008, aiming to provide to improve Pacific Island countries' accessing to disaster risk finance so as to increase the financial resilience to climate and disaster risk in the Pacific. And in 2011, a Pacific Risk Information System, or BigQuery, was launched by the World Bank in collaboration with the Pacific community to guide the model development and risk profile for the countries. Then in April 2016, a company, BigQuery, Pacific Catastrophe Risk Insurance Company, was formally established following a decision made by the Pacific Finance Minister or Forum Economic Ministers meeting in 2015 when they met in Cook Islands. This is an attempt at taking ownership of the risk they face, driven by a regional entity that put the interests and the needs of the Pacific Island countries first. Pacific Catastrophe Risk Insurance Company is owned by the Pacific Island countries, oversighting by a council of members, 6 Pacific Island countries: Cook Island, Fiji, Samoa, Tonga, Marshall Island, and Vanuatu, and 4 donors, which are Germany, Japan, UK, and US. And they are free policy holder currently, they are free currently policy holder, which is Cook Islands, and Cook Island, Samoa, and Tonga. The current situation is now, the company is undertaking some sort of a transformation to improve its relevance and capacity to serve the Pacific Island countries by diversifying its current product range to offer innovative financial solutions to manage disaster risk. And it was born to help address the disaster risk financing gaps. The fact of the matter is that some countries already taken steps towards managing their risk that they face, but there is still a greater reliance on donor support to help countries get back on their feet. Donor support is very uncertain, as you know, both in what will arrive and when, and how can a country plan without knowing when the support will arrive. This is not the most efficient way to help affected populations. And having a waiting mentality to act when a disaster occurs is far more costly than investing in reducing risk by building resilience, strengthening preparedness capabilities, so that those risks can be reduced. Some years ago, Pacific Island countries have, at the time of post-disaster, something more like an United Nations appealing for assistance. We all know that takes time to materialize, while at the same time witnessing people dying or suffering because they lost their basic social and economic livelihoods. Simultaneously, we are waiting for money to be donated or arranged to help us. But now, the Pacific Island countries have taken charge by establishing an innovative solution and developing a mechanisms to build resilience so as to effectively manage the natural hazards. And then the support from donors, multilateral or bilateral, comes later. That is what BigQuery does: promote proactive planning and provide immediate financial support to build resilience at all levels by offering pragmatic insurance solutions that increase financial response capacity of Pacific Island countries, helping them to meet post-disaster financing needs without compromising their fiscal balances and development. BigQuery provides cash payouts to insured governments within 10 working days after a qualified earthquakes and tropical cyclones. We are currently developing a rainfall product covering flood and drought, and is expected to come out of the market mid-next year. I'll talk about it in the second round of the meetings in more details. But let me be clear. BigQuery products are not expected to cover all the costs associated with the disaster. That would make the policies far too expensive. So to keep it affordable, the goal is to provide a reasonable payout to provide immediate liquidity in order to help support initial disaster relief and early recovery. The most recent BigQuery payout was about 4.5 million US made to Tonga in the aftermath of Cyclone Harold last year. So BigQuery is considered as a risk pool insurance instrument, similar to the Caribbean facility and the ARC in Africa and SeaCRIF in Asia. So that's the central concept is that by insuring multiple countries, simultaneously, the company can offer cheaper premiums for countries compared to the situations where a country seeks the same insurance coverage independently by sending the risk to international insurance market for umbrella coverage for the participating countries. I would like to underscore that the company is not a traditional insurance like Sun Insurance or etc., but it is a risk pooling instrument, creating a more diversified portfolio of risk that results in better rates with the reinsurers. One of the key innovations that this kind of insurance risk pool has brought is the autonomy and discipline that are so important for rapid actions to be taken in post-disaster environment. The company's product are purposefully intended to give countries the freedom to focus efforts on where the need is greatest rather than potentially what is mandated or expected by donors. It is also intended that the payouts from the company will finance a broad set of pre-planned activities so that this kind of insurance can also bring more attention and effort of building up a contingency plan. As I said, the company provides rapid finance for disaster relief is only part of the picture when it comes to disaster, but it's striving to make new innovative products to further assist Pacific Island countries in their effort to build resilience. The company is not competing with anyone. I have to make that very clear. Our goal is to ensure our products are unique and complement to what disaster risk finance instrument is already rolled out in the market, such as the World Bank DDO, contingency funds, contingent credit or saving facilities. So there is no competitions. Each facility has its own competitive advantage. But besides that, the company receives premium from the countries and we pay out when the triggers of the model is triggered. But at the same time, we are working with the World Bank and the Forum Secretariat. It's more like giving back some of the benefit of the countries by way of building knowledge and capacity building in the region, such as providing peer-to-peer learning, scholarship, and intensive opportunities. In August, we launched the first intensive with the University of the South Pacific. And this is the way how we are offering back to the countries and to start the conversation of having such an arrangement so that the countries can be able to benefit from a non-insurance arrangement. So this type of intensive that we have launched, we are planning to continue that every year going forward so that we provide some sort of a non-insurance benefit that advances the countries. So thank you so much, Jennifer, and happy to answer any questions.
Thank you so much, Lutu. And I believe you started addressing many of the topics that I think we'll also want to revisit later in the conversation, especially as it comes to what this role of PCRIC is, what this type of insurance can offer, what are its limitations. And I think this is a great topic for us to dive back into later on in the session today. With that, you had also mentioned the very important role of donors, which is certainly very key in the Pacific region, and they've done a lot of very important work when it comes to helping build financial resilience in this area. And for that reason, I'm very happy to be able to introduce Tim Gill, who's the Director of the Climate and Development Integration Unit of the Department of Foreign Affairs and Trade for the Government of Australia, and allow Tim to talk a bit about how DFAT has been working in this topic, a bit about their history, and a bit about how they want to continue working in this sector going forward.
Thanks, Jennifer. So, I mean, the first thing to say is that climate is a really serious issue for Australia and for the Pacific, and to recognise how important it is, and you know, the increasing disasters that are taking place, hitting Australia and the Pacific Islands: cyclones, floods, droughts, extreme heats, coastal inundation, salinisation. There's so many aspects to climate change that are really impacting on lives. And I think over the past, I guess, 6 years in particular, Australia's really started to take quite seriously as part of its role in the UNFCCC process, really making sure that our development program can deliver benefits to our region to help with climate resilience challenges that are being faced there. So I know everyone on this call probably likes metrics because you're kind of financial system people. In the climate finance world, we have metrics as well. We kind of hold ourselves as donors accountable for delivering a certain amount of climate finance through our aid program. And when we were first called upon to kind of make a pledge for how much we deliver in climate finance for the period 2015 to 2020, our government committed us to contributing $1 billion over that period, which seemed like an immense amount at that time. In fact, we overshot that mark and ended up delivering $1.4 billion in support across that period. This is Australian dollars, sorry. And we'd also promised to contribute 300 million over that period, 2015 to 20 to the Pacific, and ended up contributing 400 million. So we actually did a bit better than we thought we would, but we were coming from, I guess, a pretty low base when we hadn't had a huge, climate hadn't been a huge significant part of our regular aid program. Obviously, we've had humanitarian responses all the time, and I can talk a little bit more about that later. But I think, what we've really seen is across many of our different sectoral aid programs, our aid program managers really starting to think, what does climate mean for this program? And that's why we've seen that good growth in what we're doing. Just on Monday in Glasgow, our Prime Minister raised the bar for us. So this makes my job harder, but better, that we now have to meet a goal of $2 billion over the current period from 2020 to 2025. So that's a doubling of what we promised the first time. And within that, an even higher commitment to the Pacific of 700 million in climate financing and disaster resilience building efforts. So that's raised the bar, and that means that hopefully my job will and the job of my team will be taken even more seriously by program managers out there, and we'll be integrating climate across the whole aid program. It's an exciting challenge before us, and one that I think is absolutely necessary given the climate risks that are being faced in our region. I just wanted to give you a flavour of a few of the types of programs outside the financial sector that we're trying to, that we've been implementing, just to give you a bit of a taste of how this flows through. I mean, we could look at the prefabricated school building that we delivered in Vanuatu, which was really helpful in responding to a cyclone Harold that hit there, and it was a place where the community could shelter from the cyclone, and then was immediately turned back into an educational institution straight after the cyclone. So this is the kind of way that we're trying to change the way we're doing our development programming so that we can bounce back, we can help communities bounce back better. Another example would be in our expanding nature-based solutions programming. So, we have mangroves and seagrasses and reefs and forests across the Pacific, which are a really critical resource in disaster protection. So trying to find ways that we can help communities to really invest in those through, for example, carbon credits. So we're trying to find new ways of delivering carbon credits for forests, for mangroves, even for coffee farmers in Papua New Guinea, trying to quantify how much carbon stock is in those coffee trees, and can we deliver a new income stream that will help promote sustainability. And speaking about farming, and I think farming is really critical to the Pacific, our atoll nations in the region really struggle to grow their own food given the difficult climatic situations they face. So one of our programs is this food cube program, where we kind of introduce new ways of being able to grow fresh food locally rather than having to import everything. And that's really making a big difference to the nutrition and food security in places like Tuvalu and Kiribati. And then when it comes to infrastructure, you know, that's a key part of our work as well. So whether it's helping build solar farms, helping with Solomon Islands, Tina River hydropower, building climate resilient markets in Raki in Fiji, in Gizo in the Solomon Islands. These are just a few ways that we're trying to contribute to climate resilience in the region. But coming back to financial inclusion, which is our main topic. I mean, I went to Fiji 10 years ago on a posting to Suva, and that was a really exciting time to be involved in the Pacific Financial Inclusion Program that UNCDF led. That was really an innovative time when, you know, mobile phone penetration was just starting to take off. Mobile money was just becoming available, so there was a big effort through PFIP to try to, you know, raise awareness about the benefits that mobile money could deliver. New insurance, microinsurance packages like the life and funeral packaged insurance model, new ways of delivering remittances more speedily and easily, and a lot of work with reserve banks as well, just changing the system so that we could help reach the poor through financial inclusion, which was really the point. This is all about financial inclusion, trying to make it available for people who couldn't get bank accounts any other way. Obviously, I think through the social protection system was a really key way as well, through the government to people payment system. So that was a really flourishing period that I was lucky to be involved in. And I think what we have now is a new period of flourishing in the financial, the microfinance system in the Pacific. And I'm just so pleased that we're a part of this new program, PCAP, that's going to see so many new innovations brought to the Pacific. We've got had great experience of parametric insurance, microinsurance in Africa, in South Asia. And I can't believe, you know, this is the first time that such an insurance item is becoming available in Fiji through this parametric microinsurance product that we'll be hearing about today. It's very exciting. I think it's hopefully it's the way of the future, and it's a way that we can build on. I mean, not only the supply of financial products that can protect people from disasters, but also the build up in demand as these events increase. People really start to ask themselves, what can I do to prepare for the next one? So I feel like, you know, as sad as it is, people really do recognize that they need new products and new ways of being able to protect themselves and build their financial resilience. So we have to be ready with the right products at the right time and make sure those products are inclusive, that they're meeting the needs of farmers, smallholders, fishers, and people with disability, and especially women. So I think this is a really exciting time for Australia to be part of this new program, and I can't wait to see what it comes up with, and look forward to talking with you further, Jennifer. Thanks.
Yeah, thank you, Tim. And thanks for giving that overview. I think it's really great how you talked about how DFID had been supporting these efforts to build financial resilience and financial inclusion in the Pacific, and has come to realize also the critical role that climate plays in working in these efforts and these long-term efforts, and how this has been recognized and how that's going to inform how they choose to then support different Pacific countries going forward into the future. And the point about looking to see how PCAP has worked to already introduce the first parametric insurance product in the market brings us very greatly to our next panelist here, who is Losana Kumar, who's a project lead for the Sugarcane Farmers Cooperative Savings and Loan Association. It's a very, very important association in Fiji who works very closely with sugarcane farmers and who has been working very closely with the PCAP team to work to introduce these types of parametric insurance products into the market. And so I'm going to allow Losana to introduce herself and to tell a bit about what their association does and a bit about the work that they've done so far on this insurance topic.
Thank you. Thank you, Jennifer. Mbula Vinaka, and a very good day to you all listening in. It's indeed a privilege to be chosen as a speaker for today's event. And I'm grateful to Mr. Krishnan for this honor. Yes, I'm Losana Kumar, the Cane Farmers Cooperative Savings and Loans Association Limited Parametric Micro Insurance Project Lead. And today I will briefly provide a background of CCSLA, how we operate to serve the needs of these grassroots level communities in Fiji. Also, I convey greetings from the board of directors, the management staff, and the shareholders of our cooperative organization here in Lautoka, Fiji. Thank you. CCSLA, we are a grassroots community-based cooperative that offers value-based basic financial services on a lower scale, like investments in the form of shares, savings, loans, and even term deposits to over 4,500 member shareholders and customers. This organization was registered on the 22nd of Feb 1968, originally called the Agricultural Cooperative Credit Association Limited, ACCA in short. Now, at that time, the focal point was refinancing for the 145 smaller thrift and credit cooperatives in the northern and western divisions of Fiji. The main thrust of this cooperative thrift and credit endeavor derived from the studies made prior to 1968 because of the cane farmer indebtedness. Now in December 1979, the name was changed to the current name, Cane Farmers Cooperative Savings and Loans Association Limited, in short, CCSLA. Now, the main purpose and effects of these changes were to more clearly identify the owners of CCSLA, to expand into savings and possibly other services. Previously, all emphasis had been upon credit, and also to widen membership to permit direct participation by the individuals instead of via other cooperatives in Fiji. Now at CCSLA Limited, we attend to a wide variety of customers ranging from cane farmers, vegetable and crop farmers, poultry, livestock farmers, fishers, market vendors and handicraft sellers, most of whom are women, home canteen owners, informal workers, some with disabilities, with some source of livelihood. Hence, most of our members are indigenous, marginalized and vulnerable, and largely belong to low-income households with irregular income from farming, fishing, market vendors, etc. Now, also a sizable proportion of our members are women, some of whom are small-scale farmers, micro-business owners, single mothers, widows, and so forth. Now, moving on to calamities like cyclones, the most vulnerable target population would be this underprivileged population due to the fact that they do not have any backup plans to secure or assist them post the disasters. They do not have access to insurance covers, and they may not be aware of what these kinds of protections fully entail. Now, in our past experiences at CCSLA, we were able to assist these farmers and non-cane farmers with assistance in the form of loans and refund of shares. This is after the inspection of severely damaged farms and even houses for some of our members, as in the case of TC Winston in 2016. For those who already have existing loan accounts, they were able to access additional loans. However, for the non-loan members in our association, we were able to assist in the form of refund of shares that they had invested into the cooperative over the years, while others opted to take a loan against these shares, and they made arrangements with the association to repay over a certain term. At CCSLA, we try to facilitate these arrangements for our customers, most of whom are informal workers of our society, knowing too well that they would not receive any financial assistance from commercial banks and other institutions due to no sureties, for example, tangible security, mortgage, insurance policies, no formal income, no established employment or source of income. Now, the scenario of a post-natural disaster is often, compilation of statistics by the concerned authorities, citizens being asked to report major damages and claims, inspection by government officials, and so forth. Now, what these people actually need is instant aid arriving at their doorstep. They've just experienced a Cat 5 cyclone. There's nothing else left for them. No house, no food, no clothes, severely damaged farms, and some may have lost loved ones. How do we expect this, unfortunate to travel hundreds of kilometers just to report a claim or access some funds or to receive some form of financial aid? Fortunately, at CCSLA, we have delegated directors and representatives from each district that are always helping out during such crises. Moreover, even the farmers themselves tend to help one another as they are familiar with the concept of cooperation. Now, recently at CCSLA, we are proud to be associated with the development of the region's first ever parametric microinsurance product. We were consulted right from the beginning during product development and agreed to be an aggregator to the insurance companies to ensure that it reaches our members and a wider section of the community through financial literacy and awareness programs, thus improving the usage of suitable climate disaster risk financing and insurance products and services. We believe such programs could be a platform to educate this vulnerable population on the importance of savings, investment, and taking an insurance cover on their farms, crops, or any form of livelihood, which will benefit them in the long term when a disaster strikes. It is very critical to note that because of the traditional culture and practices that still exist in some of these rural areas on the concept of family, helping, and togetherness, sometimes it can be a challenge to educate these rural dwellers on the importance of prioritizing expenses and budgeting wisely. I believe this may be the practice in most Pacific Island nation rural communities. So it is something inborn, and this is where we as educators and trainers have to tread very carefully. I can assure that we have been successful at CCSLA with some of our rural customers by reiterating that they need to move away from the traditional thinking and views of trying to help everyone, especially financially. We here in the South Pacific no doubt have very generous hearts, but people should be educated on where to draw the line. Coming back to the parametric microinsurance covers that we have just recently rolled out, these covers should be able to alleviate the immediate problems of those who have suffered during a natural disaster. CCSLA already has savings and investment products in place for our customers. In terms of the insurance policy, we intend to encourage customers to save at least $10 a month, that is $5 per fortnight. At the end of the year, that's about $100, which should be sufficient to cover 1 year's premium towards their insurance policy. Now, in this manner, our members will be taught how to save and invest for their rainy days, hence building some financial resilience in our communities. Thank you, Jennifer.
Thank you so much, Susanna. And I think you really highlighted on some very important issues that are often not addressed enough when talking about the topic of introducing new financial products into the market and the critical role that financial literacy training and education plays. And I would very much look forward to discussing this topic a bit more with you later on in our session. You also highlighted a very important aspect, which is how do we think differently with dealing with these climate risks, especially knowing how it's likely that they're going to increase in severity and frequency as time moves forward. And with that, then that brings us perfectly to our final panelist, Sivendra Michael, who is our youth representative and works on behalf of the Pacific Climate Warriors, and who can give us a bit of perspective about how the younger generation then is thinking about how to deal with these situations different from maybe more traditional approaches that were used in the past. So with that, Sivendra, I'll allow you to introduce yourself.
Thank you. Thank you, Jennifer and organizers, for the opportunity to share our inputs in this session. I'm really honored. And thank you, Christian, for also inviting and extending the invitation to young people. My name is Sivendra Michael, and I'm with the Pacific Climate Warriors, which is a movement group part of 350 Pacific. and I'm also a development practitioner with over a decade of experience in the development sector. We can all agree that youth perspectives on such critical matters are actually left out, which perhaps explains why the notion of building financial resilience is not adequately debated or unpacked amongst young people. As a young person myself, I have joined conversations around the much debated concept of building disaster resilience. Why do I say this is a debated concept? Well, extensive literature shows that many interpretations of the term, depending on what perspective you take, has its own interpretation. So from a scientific perspective, they usually say bouncing forward or returning to normalcy. But we know that there is no returning to normalcy after disaster, because part of our recovery efforts, yes, homes can be rebuilt, losses can be recovered, but we often ignore the trauma and social losses that we experience as survivors. As a Fijian myself, and one that has conducted research along many communities in Fiji, our statistics from the Center of Research on Epidemiology of Disasters show that over the last decade, Fiji has actually experienced more than 130 disasters, 83% of which were climate induced. So in recognizing the financial implications that disasters have on individuals, households, societies, and the wider economy, organizations such as those that are part of this panel and many others have been pushing for the development of financial products to help us cope better in the aftermath of a disaster, or to build back better, or as development practitioners like to say, build back better or bounce back better. Unfortunately, PIC governments do not have access to a wide range of financial products to help them build back better in the aftermath. Majority of the time, there is an influx of development aid to support countries in the aftermath, or as Mr. Tim had mentioned, we need more efforts and more financial products that should be readily available for them to access. We all know that development assistance is also unpredictable because we do not know how much we are going to get, how fast it is going to arrive. One of the most common ways for the governments to quickly access these funds following a natural disaster is budget relocation. And to a disappointment as well, the financing of relief and recovery and reconstruction, governments have to divert funds from important initiatives like health and education and economic development prospects to the recovery efforts. This has actually negative impacts on the long-term social economic development of the country. And also it makes us move away from normal or conventional, or makes us move towards conventional practices. So my call is actually to try and encourage organizations as those in this panel to continue pushing for risk financing strategies that actually outline financial instruments available for all, and one that is actually inclusive and accommodative of different demands. Recently, we had a Youth for Pacific conference, which gathered around 600 young Pacific people across the Pacific and the world, the diaspora group. And it was echoed in the Youth for Pacific Declaration on Climate Change, which is currently being championed at COP26, that there is a need to revisit the conventional approach to development. I think we need to bring climate change and climate finance into the development paradigm. And if we need to address the fundamental drivers of vulnerability to climate change, we really need to go further and reshape all of development. So we do not only need to consider what is effective financial products, but more around what does climate resilient development financing look like? So this is basically critical for building financial resilience in my perspective. And as it is spoken about, it takes climate change agenda to the heart of development. So what have young people been doing in this space? So the Pacific Climate Warriors, we have been actually stepping up and genuinely participating in conversations around climate finance. So for example, there is an ongoing research that has been led by UNDP and a few other agencies like PIFS and the UK FCDO. So we have actually tried to have conversations in outside space about what does climate finance effectiveness mean. We also have been part of UNCDF's consultation meetings on the design of the parametric insurance. And as part of their stakeholder engagement process, I guess what is more critical is to get feedback from young people as well, and what does it look like for them. So our learning actually does not stop there. We go back and share this learning to our networks. We have been engaging heavily on research where we scope out access to appropriate and affordable financial products. Again, a point to note here is that our commercial banks currently, I'm going to talk about the context of Fiji particularly, they do not have enough products to encourage youth entrepreneurship. Their processes and procedures actually demoralize young people from actually investing as well. The more micro level work that we have been doing is around empowering our younger generation on savings through the financial literacy programs. We have huge challenges, particularly because of the perception that young people have on the need for financial services itself. So in 2018, a colleague of mine who is currently with the Ministry of Economy and myself, we launched a knowledge sharing platform called Expon IQ, which is basically exponential growth of your intellectual properties. And so where we connect actually young people to massive online courses focused on SDG. And a component of that looks at financial literacy, where we have young people engaging in courses, but also doing the work on the ground where they have social media campaigns. One of them is called #FinLit, which was organized by the Reserve Bank of Fiji through the previous program called Valuing Voices. And this is basically to amplify our learnings. I would acknowledge, yes, it is baby steps, but it is something that we have collectively nurtured, and it is gaining traction as time overlays. So and over time, I think it can make a significant difference, because these initiatives actually demonstrate not only how we can gauge the interest of young people towards the area of building financial resilience, but also serves as a starting point for bigger work in this area. Lastly, insurance is another layer of work that needs to be further explored. I guess we need access to reliable statistics as a starting point. We need disaggregated data so that we know what percentage of population by demography has insurance or has access to financial products as well. The 2020 Financial Demand Side Survey conducted by the Reserve Bank of Fiji actually identifies that there is inadequate levels of financial literacy and lack of awareness on financial instruments and services amongst young people. And two of the primary reasons why was because of the usage of financial services such as insurance in the Pacific Islands and including Fiji. And the other one was the lack of distribution because of affordability and the lack of trust that young people have for financial institutions. I also learned as part of my PhD journey that insurance providers are quite risk adverse because because of the issue of the reassurance pool, particularly when it comes to insuring businesses or young entrepreneurships against climate perils. I know that UNCDF has been working very closely to try and get micro insurance products for MSEs out there. And as the previous speaker has mentioned and shared an example of one of their products. Again, I think it needs to go back to the previous point on educating our young people on the importance of insurance and getting them to self-realize this through important conversations like this. I would like to wrap up by saying that across Pacific Island seeds, youth are most vulnerable to hazards because of the lack of employment opportunities that actually precludes them from many from building financial cushion or otherwise accessing tools that could increase their resilience, which is better skills, education, and formal employment. Currently, employment opportunities for young people are especially sensitive to economic cycles, also considering the COVID situation that we are in. So youths generally tend to first lose their job in times of economic contraction and the last to gain employment when it comes to economic rebounds. We have seen lived experiences and lived testimonies of young people that have been shared on social media. So I actually encourage organizations and civil society groups to continue working with youth-based organizations and youths themselves to build greater understanding of the broad-based challenges that youth face and also bring them part of the conversation in a more genuine manner. And thank you for this opportunity once again.
Thank you so much, Surendra. And I think you really highlighted a lot of very critical points. That's something that we really need to take into account as we move forward in the sector. Certainly, the youth populations all over the world are in a unique position when it comes to trying to address climate risk, and because of the type of professions that they have and the type of resources that are available to them, it's often very, very difficult to then recover quickly from different types of climate events. And so I think you highlighted a very important and crucial point there. And I was very happy to see you also acknowledging some of the other topics that had already been spoken about this critical need for education on financial literacy, and this need for a paradigm shift when thinking about how we want to work with different groups on development and how climate needs to be integrated into all of these. And so with this, thank you panelists all. I think this gives us a really good broad common understanding of exactly how different organizations are addressing this topic of building financial resilience. And with that, then I would like to go a bit deeper into some of these topics and invite all of the panelists to join me for this. What I'll do is we'll questions that we've had on these topics, and that certainly that you see in Glasgow, a lot of times these questions are coming up in sessions and side events because the topic is so new. Many people are not aware of how it works and what the potential benefits of these different types of disaster risk financing instruments would be. And for that reason, then I would want to address the first question to Mo from the Pacific Island Forum. A lot of people, when they think about developing these different types of disaster risk financing instruments like insurance, they focus very heavily on the need for the private sector to take up the leadership in these efforts. However, I believe what you've seen in your work is that the government also has a very key role to play in making these types of initiatives successful. And I was wondering if you could maybe enlighten us a bit about what you think the role of government is in developing these products and in increasing the access and usage of these different instruments.
Thank you, Jennifer, and thank you to our colleagues that for their earlier contributions. I think, for one thing that is highlighted is that although we might think that we've done a lot so far, we perhaps have just kind of scratched the surface with a whole range of things, listening to Sivendra, for example, and Losana. The disaster risk financing conversation in the Pacific has been very much government-centric for a number of years, and there are reasons for that. From the Forum Secretariat's participation in a perspective that because we engage primarily with central agencies of government like the Ministries of Finance in terms of the discourse, the dialogue that we help to support, it's not surprising, therefore, and it's only appropriate that appropriate government agencies take the leadership for the work, and in this case, in disaster risk financing at a national level. But disaster risk financing and insurance, these are part of a broader range of concerns and of initiatives that we undertake within the context of disaster risk management, which really is about building the safety and resilience of our communities. And so in terms of the role that governments are supposed to play, I think, just to say, I think they play a very important enabling role. It's very multifaceted. They facilitate, they coordinate, they connect, they monitor. There's anticipated level of inverted commas quality control. They need to create the correct and appropriate enabling environment for the suite of products and instruments to be developed, to be focused, to be targeted at addressing the issues of vulnerability and risk that our communities face. So, I mean, in the context of disaster risk management, financial protection is one of a range of measures. alongside other measures in terms of, for example, preparedness and measures to mitigate risk. I think for governments in terms of their enabling role, trying to abide by some of the foundational pillars of disaster risk financing, which we have come to learn in the region about making sure, for example, that the information upon which decisions need to be made in the context of financial protection measures, that we have the right information, that it's accurate, that instruments that are developed in such a way that it provides timely funding to address the needs of the affected communities and not just government, as it has been for a number of years. Understanding that no single instrument can address the full range of risk, that we're looking at different instruments to address different types of risk, and making sure that people who receive the financing receive it in the most appropriate way possible. So those are the kinds of, I guess, pillars or foundations, or principles that governments should generally adhere to. And then making sure that in abiding by those principles and in moving forward with actions to increase or strengthen financial protection, having a good understanding of what kind of financing already exists in this area to address the immediate post-disaster response, the risk assessment, gathering risk information, deciding on policy priorities, building financial protection strategies, all of this in a very inclusive way, moving beyond the comfort zone and the confines of the bureaucracy and reaching out to people like Sivendra and Lausanne, and having their contributions to help strengthen and develop those kinds of targeted approaches. And also, disaster risk financing insurance is part of the suite of interventions that governments typically take, making sure that what we do in disaster risk financing is well connected with other policy areas, what's happening in other policy space like energy and water and infrastructure. So it's quite challenging, and for those of us who work at the Forum Secretariat in this area, trying to work with governments to better coordinate regional efforts, development partner and donor efforts to support country priorities, trying to encourage making sure that the conversation reaches different levels, having different stakeholder interests brought to the forefront. This is quite a major preoccupation, and going back to the point I made earlier, we perhaps are just scratching the surface. The forum has been involved in this space, disaster risk management, as I said earlier in my introduction, going back to the mid-1990s, disaster risk financing about 14 years ago through the Forum Economic Ministers meeting. And just at the Forum Secretariat, it was only this year that we really got a formal mandate from the finance ministers to work in certain specific areas and support national efforts in improving financial protection. So I think we have a lot to go. It's very encouraging, though, that we have these kinds of opportunities and dialogue with other members of the panel here, and also hopefully to hear from others so that we can enrich our efforts and make sure that what we do is as effective as possible moving forward. So hopefully I've responded appropriately to this question about the role that government should play, and really, and as an extension of that, what we at the regional level should do to help governments do what they need to do better.
Yeah.
Thank you.
Thank you so much, Mo. No, I think you really hit upon some of the critical issues that are needed in order to develop the sector a bit further, especially this need for risk assessments, for gathering data. One of the big challenges that occur when trying to work on this topic is that if there isn't enough information and data out there, it's very difficult to develop reliable and accurate disaster risk financing products. And I also appreciate your point about the need to reach out to different groups, including like the youth and farmer representatives and representatives from all different groups in the countries in order to see how they're being affected by these climate events, so that the products can be designed to reflect these different needs from all of the different groups that are represented there. And you also spoke about another important point that I want to address with Lutu from PCRIC, which is that there's no perfect solution or instrument out there. And certainly it's not the idea that governments or individuals should just rely on one type of instrument. And so when we talk about this topic of insurance, perhaps Lutu, because it's still new to many people who don't work on this topic and who aren't actively in the finance space, and insurance often seems not like the most attractive option because people are a bit resistant to wanting to pay the premium year after year and maybe not seeing a benefit from that. And so perhaps what you could do for us is to tell a bit about how you see insurance playing a role and what are the unique benefits to it as compared to other types of instruments that are available on the market for countries.
Thank you, Jennifer. I think a couple of issues in the interest of time. The reason behind the slow uptake of insurance in the regions, basically it's based on two issues. One is affordability, and the other one is a lack of understanding, more like technical understanding of the product or the model being applied or being developed to be used. In terms of affordability, things are getting tough this time, and COVID has made it worse in terms of physical availability to pay the premium and to also meet other immediate needs from the countries. And for that particular reason, that's the reasons why the company reached out to our donors to see if they can consider additional resources, new money to provide for us to help out subsidizing the premium finance for the countries. And I'm happy to announce with permissions being given to me by the Germany government, they have given us about 10 million euro for us to use that to subsidize the premium financing for the countries in our existing product that we are currently offering the market, and also the rainfall product that I spoke to earlier on in terms of rolling out next year. So I'm hopeful that by mid next year, we can, with the borders opening up, we can visit the countries to start having the conversations on how to utilize these resources going forward. The other one, in terms of the lack of understanding, when I took this position and I had consultations with more than 10 countries, and what I heard from them, they have mixed up or perhaps confused themselves with traditional insurance with risk pool insurance. So, and maybe that's the biggest culprit in terms of slow uptake, simply because of the lack of understanding of what's the rationale behind or between the demarcations between traditional insurance and risk pool insurance, as I alluded to in my earlier remarks. So that's also something to be planned. And going forward, the company, what we are currently doing right now, as I mentioned in my earlier remarks, we are working closely with the Forum Secretariat and also with the World Bank to develop some sort of a technical assistance program so that we can, come up with the ideas of how are we going to improve the technical expertise and the technical knowledge on disaster risk finance on the ground. So hopefully next year we can be able to get it done and rolling out to the countries in different forms of capacity buildings just to enhance them. But at the same time, we, from the company perspective, what we are currently doing right now, we are reaching out to the countries, trying to utilize the platform that we have now in 3 areas by, from a scalable solutions approach. One is scaling up. In terms of scale, what I meant by scaling up, meaning that the companies provide some sort of a policy assistance to the countries or influence the policy consideration and development on the ground. That's what I meant by scaling up. Scaling out in terms of reaching out, instead of, the current situation now, the company are dealing with the government. We are processing through an amendment to our law to see if we can also move out or include non-solvent parametric insurance. So by way of reorganizing or restructuring the company into a segregated cell, meaning you have to segregate your risk, and at the same time, that's more like an effort to improve what we can offer the countries to really meet the needs of the country. Because the current product that we have right now is only like the cyclone earthquake. It's more like meeting the South. It's not really the North Pacific. Like I can say Marshall Island, they are very low risk when it comes to cyclone. So they are not have that appetite to, to come and versus the policy, even though they are member of the council. So that's what we are doing in terms of scaling up, scaling out. And at the same time, we are also doing some sort of a work to scale tip. Scale tip meaning using the platform that we have to change the mindset of our folks in the Pacific from being reactive to being proactive. Like moving away from just waiting for donors to provide any additional resources post-disaster situations, to be prepared, meaning be proactive, putting aside money for a rainy day so that you can be able to buy an umbrella when it's raining. So that's not yet well embedded now, but because what is well embedded right now is just, okay, we just wait for the donors to come post-disaster. And when you talk about insurance, it's more like a very scary terminology in some of the folks that I spoke to in the region because of the dollar sign attached to it. So the idea here is to change that mindset. Thinking of insurance is very costly, but at the same time, giving us the power or the authority by the Pacific Island countries to reach out to the donor partners to really, provide us with additional resources so that we can subsidize. But the subsidization is not really like 100% coverage. We are thinking of a share costing of the subsidization arrangement because that's also creates some sort of ownership. If it's going to be 100%, subsidization, I'm sure you are asking for disaster because after 5 years or 2 years of the arrangement, some of the countries will, we will withdraw from the arrangement. So that's how I see it from our perspective. Of course, disaster risk finance and insurance is a new terminology in the space, but it was raised before, like what Mo was saying, 15 years or 16 years ago. But it's become more like so visible now in the regional arena. So the company, from our perspective, we have integrated the company to this regional coordination architect by the Forum of Economic Ministers approving the company to be an observer member. So that's a great outcome from the Forum of Economic Ministers in terms of us being part of this regional pool so that we can have a better coordinations and avoid duplications, but instead build synergies for whatever we can offer the countries for their own benefit. Yeah. Thank you so much, Jennifer, and I hope that's answered your questions.
No. That certainly answers many of our questions, and it's really great to hear this positive encouragement, this news from Germany supporting premiums to help make them affordable, but also the recognition of PCRIC that it can't be something completely subsidized, but needs to be something that's a joint partnership and risk sharing. And I especially like the point that you emphasize this need for education on insurance and disaster risk financing, because it is often due to misunderstandings that people are hesitant to take up these different types of instruments. And with that, then I would like to then jump over to Losana, who works a lot with groups who aren't familiar with these different types of instruments. And especially what you often see is some groups will end up being underrepresented too when it comes to the uptake of certain products. What you see often in countries is that women often make up a much smaller share of policyholders for insurance compared to their male counterparts. And so I'd be curious to learn from Losana about how they plan to address this issue of reaching out to underrepresented groups, typically underrepresented groups such as women, and their approach.
Yes, thank you, Jennifer. As far as this, the micro insurance microinsurance, parametric microinsurance product is concerned, generally, number of women accessing financial services is lower than men in many markets, including Fiji. But at CCSLA, we have a good number of women members, predominantly market vendors, small canteen owners, handicraft sellers, and even some cane farmers. Traditionally, we have been targeting women as we strongly believe in their financial management skills. And our financial literacy campaigns have targeted women. Now, we make all our advocacy initiatives inclusive to women and people with disabilities. In our parametric microinsurance outreach campaigns, we are promoting through women's groups, village level women committees, and even church-based women groups. And, some of us have social networking with the women, NGOs. So that's where we are able to reach out. But another hurdle that we have encountered was the mindset. For example, when we went, about with our outreach, when we spoke to most of the women who showed interest in signing up for this microinsurance product, the usual reply was, "Let me ask my husband and I get back to you." So I guess it's not only educating women, Jennifer, but men also, especially their husbands and partners, to support and encourage their spouses to sign up for such schemes that will ultimately benefit the families. And I'd also like to address some point that Sivendra raised regarding the youths, and their difficulty in reaching out to financial services with the commercial banks. We're also available here in Fiji. We can always address and reach out to these youths should they require some financial services and support. That is something that we also can talk about with the stakeholders, going forward, to be able to assist them, so that they can access this disaster risk financing opportunities that is available for these people. Thank you, Jennifer.
Thank you so much, Lasana. And I think that really, it's an important point for people to understand that it's always, one needs to understand exactly why people are making the decisions they are and what the rationale is behind it in order to find out ways to reach them and to develop products that actually meet their needs. And highlighting the point of not just reaching out to women, but seeing how they're making their decisions, and this need to also speak with both the men and the women, especially in families and relationships, I think is very key and a very important finding that needs to be taken into account going forward. And I also appreciate your great offer to Sivendra to work more closely with youth on this topic. I think that's great. And maybe then for that reason, we'll go to Sivendra now. From your perspective, when you think about how insurance companies currently approach the youth, what do you think they need to do in order to attract a youth market, and what should they consider when developing climate risk insurance products for younger generations of Fijians and other Pacific Islanders?
Thank you, Lasana. See, this is the power of being in these kind of spaces and also networking. So thank you, Lasana, for that offer. I shall also communicate with you on a later base after this. So Jennifer, that's such an interesting question, because I'll speak from my perspective of when I was conducting research as well. I think one of the biggest issues that I have is, or that young people have come across, is their understanding of the product, which Lasana has just touched upon. And I guess it's about building trust for the product and reducing the misinformation that is there currently that exists in these spaces, so that people or beneficiaries actually understand the product that they're buying. This is something that is like really important for a micro product like parametric insurance. So there needs to be this whole kind of understanding. And I guess the question then comes down to who actually is responsible for enhancing the understanding of the products to the targeted group, such as young people? Is it young people themselves that is trying to do that for the other young people, those that are already in the space, those that have an understanding of the product, because it is easily translatable or understood at that level, or women to women, like Losana has mentioned, and there can be issues as well, or whether it is the developer of the product itself. So that's something that needs to happen. In terms of your question around, product design, distribution, and marketing, I guess there's many layers to this. For the pricing, it's important that we need to offer prices that are affordable for everyone. And my recommendation is basically to look at potential offerings and different variations of the product with different pricing structure. This came out very clearly in the insurance board meeting, where different insurance companies ask, what is our loss ratio? Whereas some young people are in positions where they are able to invest and they are aware of the importance of insurance. So they could have a different pricing structure for them, and they are able to, get insured for a larger sum and so forth. But I guess the main thing is getting the product out there and making them understand. In terms of marketing, I think we need to adapt to this ever-changing world that we are living in. The youths these days are so savvy on social media channels. So we could use influencers to try and talk to them about the product, or make them understand, why it is important to invest in financial products that actually can protect them or safeguard them from future losses. And I guess this can slowly start changing perception, because they're so easily influenced by discussions that happen in these spaces. Mm-hmm. And lastly, on distribution channels, we need to actually adapt to the digital world and and go with what is currently more accessible for young people. Young people as well, like they live or they are in places where it's hard to access transportation. So having this digital wallet, or having something like how M-Pesa and MyCash is working in Fiji, it works for them. And I guess it's working now with more the younger population, because they are finding the benefit of having digital wallets and using digital technology for almost everything. So yeah, so leveling up or leveraging off the existing digital tools to try and get them to enhance or participate in these knowledge product services as well. Yeah.
Yeah. No, I think those are some really great points, and there's certainly huge potential with digital technologies in terms of what they can offer in terms of ease in the process of access to insurance and distribution of payouts, and especially in the possibility to make products then more affordable because of the reduced administration costs. And I also very much like your point about using new technologies like social media as meeting the customer or potential policyholder where they're at, using these new type of platforms that are out there in order to reach different groups, I think is a great point. And so to sum up, because we're coming quickly to the end, I'd like to go back to Tim to bring us kind of circle. One of the topics we had been discussing a lot was this need to change how we're thinking about climate risk and how people need to become more aware of how they want to deal with these risks going forward. And I was curious to get Tim's perspective. DFAT's going to be working a lot more, as he explained earlier in the session, with supporting these different climate initiatives in the Pacific region. And it would be interesting to learn from his perspective what was the need to dive more deeply into this topics and to kind of have this paradigm shift of working more heavily in the climate sector.
Yeah, thanks. I'll try to make it fairly quick, but I mean, it's been a really rich discussion. I think, I suppose just talking a little bit about the way that we're working in the humanitarian sector, a few people rightly said that, Australia is an important humanitarian responder, and, we're usually there when there's a disaster striking in the Pacific. But I think it's important to be aware that we're really, rethinking the way we do humanitarian work as well. Of course, our humanitarian responses will continue, and they have to adjust themselves to the climate challenges. You know, they're more frequent, sometimes simultaneous. The needs are different. Sometimes the needs are bigger than we've ever had before. If, you know, when we're experiencing those mega cyclones, for example, or a really extensive drought like we've seen in PNG and the El Nino. These are important. We have to adapt our responses, but we're also just thinking increasingly about this concept of anticipatory action, where, you know, put simply, dollar spent now saves a dollar spent later, you know, after the disaster occurs. And that's really is driving a lot of our humanitarian policy at the moment. This kind of, when we're faced with these cascading risks from climate, it can reverse decades of development gain and have serious consequences for people and economies. So this is a dramatic shift that's going on, and it's requiring us to move from just managing disaster responses to managing the underlying risks that are driving the disaster events. You know, it's a theme that many of the speakers today have kept returning to, but it means that we want to broaden our focus from managing emergencies to managing risks, from thinking about individual hazards to thinking about interdependent systems. So, you know, for that reason, we're really proud to be hosting the Asia Pacific Ministerial Conference on Disaster Risk Reduction next year. It's been delayed a couple of times because of COVID, but we're very excited that it's finally going to be happening. And the focus will really be on disaster risk reduction and how can we reduce the risks that the countries and communities are facing. And we'll be coming out with our own regional action plan on disaster risk reduction later this year. So we're finalizing that at the moment. We're also a member of this Pacific Resilience Partnership, and that's an important way that the Pacific itself can drive this agenda. I think I have a slightly different perspective to Lotu on this. I think, you know, over more than 10 years of seeing how disasters response has changed in the Pacific, I would say, if anything, there's more, you know, signs of resilience, more signs of localization, of ownership by countries and by communities of their own, you know, need to prepare and respond. And we're seeing, you know, governments driving the response and, you know, telling people, countries like Australia, we want this, we don't want that, and how you can help us and how you don't need to help us. And that's really where we want to be, you know, when countries are really driving their own response. At the same time, we know that climate is introducing more and more complexity and difficulty in being able to respond. So I suppose, you know, one of the new initiatives that we've just signed up to last night, our Prime Minister launched at COP alongside the Prime Ministers of India, Fiji, UK, Mauritius and Jamaica, this new Infrastructure for Resilient Island States initiative. So that's seeing us all pool our resources behind much better technical assistance and advice to the Pacific on how to build infrastructure that's going to be able to withstand these climate and disaster challenges. That's just one example. I suppose another example I wanted to highlight very briefly is on social protection. We're seeing these social protection systems developing, and our new partnership for social protection program with the Pacific will really start to support that in a new way. We've seen social protection top-up payments in the Fiji in response to Cyclone Harold and COVID, which we supported. Cyclone Gita in Tonga was also, you know, a way we could support these shock responsive social protection systems. So these are the systems that we need to build, right, so that we can all respond together, collectively, in a much more systematic way. And just coming back to the starting point of our conversation and hopefully helping you finish this off as well, Jennifer, you know, if we're talking about financial systems being more resilient, it's about having a better system, right? That's more innovative, inclusive, and ensuring of people. So it responds to the need that people see, that they want to be able to bounce back from these shocks. They know another shock is on the horizon, and probably much more willing than they have been before to invest in those, as long as Sivendra says, you know, they're the right options. They've got to be priced right, they've got to be marketed right, they've got to be delivered right, and they have to be seen to really be benefiting. So I think bringing the innovations that we've seen in places like Kenya, like India, all over the world to the Pacific is part of the challenge, adapting them in really Pacific ways so it responds to those needs of individual groups and countries and communities, and is as inclusive as possible of the poor. We don't want insurance instruments that can help that small proportion of the relatively wealthy who can afford it, but we really want this to reach people who need it day to day. And I love to see this being rolled out with farmers, fishers, and women's groups in the Pacific. I think this is really positive. It's exciting, and I think it's going to gain a lot of traction. Thanks very much.
Thank you, Tim. Yeah, I think that really helps highlight some of the main messages that we've been hearing in this session, and especially, yeah, it's because of this fact of cascading risk that can really affect the long-term well-being of individuals and of countries. And that's why this topic is so critical to all different types of development efforts that we want to put forth going forward. And it's great to hear that Australia has been so receptive to listen into countries' needs, and then has been taking the initiative with them promoting and joining this infrastructure for resilience initiatives. And so very much looking forward to seeing how this is going to develop also over the next couple of years. So with that, we're quickly running out of time. I would like to pass again to my colleague Krishnan to close us off for the session.
Yeah, thank you once again, Jennifer, and thanks to all panelists for your very passionate and insightful presentations. Each perspective was very significant in adding substance and meaning to a theme that is very, very relevant in these times. As our leaders continue to engage at COP that is happening right now, we have our own individual and collective tasks sort of cut out. I don't want to go into an elaborate closing remarks. Like, suffice to say that what we just had over the last 90 minutes was like a classic Hollywood film or a good book that we read, and this is something that can be revisited and I mean, like, can be talked about. For those that did participate, it would have been a very enjoyable and at the same time a very rewarding experience. So like what actually, before summarizing the discussions in brief, I would like to inform the panelists and the audience that the Pacific Insurance and Climate Adaptation Program that was alluded to at several times during this panel has plans of like replication in the Pacific, going from the lessons learned in Fiji to Vanuatu and Tonga in 2022 and beyond from 2023. There was a mention about social protection. We are also in discussion with the Department of Social Welfare and the World Food Program to support a pilot for a macro to micro scheme that that should cover an initial cohort of around 300 beneficiaries, social protection beneficiaries. So what we learned today was that like disaster risk financing is an important part of a suite of interventions very critical to building resilience in the Pacific. It does not exist in a vacuum. It draws from and builds on the work and interventions in other areas, as Mo mentioned, on say risk information, profiling, preparedness, anticipatory action, and several others. The tools and instruments can help countries to better reduce risk. The need for interconnectedness and interdependency has been well established. No institution can operate in a silo. Let's all come together, strengthen our cooperation and coordination, synergize our efforts and resources to achieve common objectives. Let's take a minute to pause and think. What is it that we can do in our lifetime within our capacities that will make the world a better place for future generations? I think from the very rich discussions today, there are a lot of food for thought, such thoughts, and I'm sure that all participants like me would have benefited from these discussions. On that note, a big Vinaka Vakalevu to all panelists, to all participants and the organizers, and I declare the session closed. Vinaka.
Vinaka Krishnan, Vinaka everyone.
Thank you. Maybe we'll take a quick photo with the panelists too. And thank you participants for joining, because it's exactly this topic of education and understanding that we want to promote. Okay.
Thank you, everyone.
Thanks, everyone.
Thank you.
Thanks all of you. Bye. Good day.
Naka and Mode.
Thank you.
More there. More there, Manda.
Good night, Lee.
Thank you.
Mo, are we taking a picture or?
Yeah, so I've taken a couple of photos.
Great.
Thank you, Sane, for coming on.
Okay, so yeah, I'll take
Thank
one.
you, Sunny.
And then, yeah, so the session should be uploaded onto the Resilience Hub website also tomorrow, they said, and there's also going to be a summary of the key findings that's also going to be shared and promoted on social media. So we'll send all of those around to you. It will probably be morning my time.
No problem.
Yeah, later in the afternoon. But thank you again to all of our
Thank you,
panelists.
Jennifer. Thank you. Thank you, team. Thank you.
Thank you, everyone.
Bye.
Naka.
All right. Thank you.